Hi friends, Kurt Triebold here with One Tree Hill, and this is your latest market update. The bear market ended 1 year ago this week, finishing one of the fastest and most vicious bear markets of all time, one that led to a downturn of about 34%. Things have now come full circle a year later as economies are recovering across the globe. Incredibly, the S&P 500 has increased more than 75% since the lows a year ago, making it the best start to a bull market ever. After such a strong first year, where may the market go from here? Here are some thoughts for you to consider. Since World War II, there have been 6 other bear market declines of at least 30%, and in every single case, the S&P 500 was up firmly the first year with an average return of more than 40%. The good news is the gains continued the second year as well, with stocks up a solid 16.9% on average. However, pullbacks do tend to happen in the second year of a recovery, with an average year 2 pullback of 10.2%. Considering the current bull market reflected the best year ever, could we also make the case that an above average year 2 pullback is in store? Time will tell. It's important to remember that this bull market run is still relatively young, and while a pickup in volatility would be normal at this stage of the game, vaccine distribution, fiscal and monetary stimulus, and robust economic recovery all have our confidence high that such a pullback would be temporary. There still are a couple things for us to watch closely. COVID-19 still presents a lingering near-term risk, with new variants of the virus adding to worry, and additional swift moves higher in interest rates could also cause equity valuations to contract meaningfully and is an important factor to keep an eye on. What is the best way to play this? For the time being, our advice hasn't changed. We continue to recommend an overweight equities and an underweight fixed income relative to investors' long-term targets. That's it for this week's market update. Stay well, everyone.